Hello everybody, welcome back to the channel. When I think of cannabis companies and cannabis stocks more specifically, a lot of people, including myself, get turned off automatically. Often cannabis shops are associated with being low quality, kind of trashy, and notoriously a bad investment. We'll make the exception for one company because I believe that this cannabis retailer is a bit of a hidden gem in the investing community. Today it's a video that's overdue and that I've been working on for a while, and it is the HITI stock analysis. Now, part of today's video will be from my final presentation for one of my classes. I chose HITI. I thought it was a fun project, so today I'm going to be using that, and I'm also going to be going over on FinChat. Use our affiliate link. It is in the description. It goes towards CFK and all the proceeds there. In today's video, I'll be sharing how I found out about HITI, my plans, if I'm buying now, my analysis on the company, what I love about it, what I don't love about it, its financials, and so much more. I want to give a fair warning too for this video. None of this is financial advice. Please do your own research. And small caps like HITI can move very fast up and down in price, so you need to have a good stomach if you want to own this company or any small caps. Let's get on to the video.
All I need are some tasty waves, cool buzz, and
I like money.
I'd like to give credit where credit is absolutely due. I found out about this company from Blake Downer on our live show, The Cash Flow Kings. He mentioned it, and I didn't really look a whole lot into it, and then eventually Fiscal started buying some, and we had a HITI roundtable, and I was eventually convinced to pick up some shares. I initially started as a small kind of a gamble holding, but the more I researched this company and the more we talked about it on the show, the more I became convinced and convicted in my thesis. I learned that it wasn't more of a bet. I quickly saw how fast small caps can move and how fast the market can appreciate companies when they start generating cash flows and good fundamentals. So instead of a small position, I've been building it up as of recently, and I'm looking to make it a core holding. I'm continually averaging in right now. I was up to the point where I saw 78% return on an investment I've had for 3 months. This was also the start of my journey when it comes to small cap investing and finding companies that are in the beginning days of their glory. Let's start off by talking about what HITI is. HITI is a retail cannabis company in Canada and now Germany. I did not have that when the presentation was said. They recently entered Germany in the medical marijuana field. They're currently one of the biggest players in Canada when it comes to cannabis. Right now they have a 12% market share in Canada, and they're looking to make it 20%. As I mentioned, it's crucial to understand that HITI is strictly a retailer like Costco. They do not grow the plant itself. A lot of the cannabis growers are just very unattractive businesses, and they fail pretty quickly. HITI is strictly a retailer. At their stores, HITI will sell like glassware, they'll sell the actual plant itself, snacks as well, because people, when they're high, they like to eat more. The glassware and stuff is very high profit. They get it from China and India at very low prices, and they can mark that up, and it's very high margin and good for their business. They have a discount model store approach, which is extremely rare and unique in the cannabis industry. Think Costco when you hear that. More specifically, they do that through the Cabana loyalty program, which I'm going to talk more about. You may be wondering, what differs HITI from their competition? Do they have friendly stoners, better grass? What is it? Well, HITI funds their organic store growth through free cash flow. That's very rare to find, and it's an emphasis point from their CEO, Raj Grover. This is just very healthy for a business to be doing this, and rare to find in the cannabis industry. HITI will buy up small cannabis stores once they cannot compete in the market anymore. As I mentioned, a lot of the stores are just poorly ran businesses and fail pretty quickly. That's when HITI, who is a strong, dominant player, will come in, eat them up, and buy them up, and usually they will remodel them as a Cabana store. One of the big focal points that Raj Grover has as a CEO is having very clean, visually appealing, and welcoming stores. Now, often, as I mentioned, there's a stigma with cannabis is that like the stores are very trashy. Just go to New York and look around. It's everywhere. Often on my way to the gym, I'll drive by a certain area of town where there's just a ton of dead retail cannabis stores. I don't see a lot of customers there. They all look very trashy, unwelcoming, just very poorly ran, and I'd have to bet money they'd probably be out of business in the next 5 years. But the stores smell good. They're very clean, very appealing. They're also safe as well. In Canada, you can actually use a credit card to buy cannabis, which you cannot in the United States. So it's it's not a complete, destination for a burglar to come in and take all the cash you're holding. As I mentioned, most cannabis stores have a really negative stigma around them, but simply through maintaining and making your stores really nice and visually appealing for customers, you're slowly growing your brand and your recognition over time. And cannabis is very niche and very saturated, especially in Canada. And in the United States, if federal legalization occurs, it's going to be even more saturated and niche. And by High Tide really putting emphasis in having clean and visually appealing stores and growing their brand and everything that comes along with that, it's going to be a long-term advantage for them. But the more saturated the market gets, it's actually an advantage for High Tide. It leads them to be able to buy dying down stores and drive the competition down over time. You see this with Canada already. You can see the cannabis retail store growth by province in Canada, and it is growing down. Just imagine what would happen in the United States and Germany. Something that's very important for every business that I own is that they can go through tough times and come out stronger and adapt. So here are some times that High Tide needed to adapt. In 2022, cannabis stores in Canada became so saturated and so niche because of federal legalization, they needed to just adapt or they'd go out of business. So what they did is that they adapted a discount model from Costco. This is essentially where you need a membership to go in or shop or get exclusive perks, and that's just reoccurring revenue. It really helps against inflation and all other sorts of economic troubles that really eat up smaller stores. This made them stand out and get a competitive advantage over the niche, regular, everyday cannabis company in Canada. Essentially, how this works out with the discount model is that Costco has negotiating leverage with power and lower pricing. They can offer lower prices to their customers and members. The membership counts increase, resulting in higher sales volumes, and that's just a repeated cycle. It's been proven to work, and it's working right now for High Tide. Today, the Cabana Club has 1.5 million members only in Canada. They're also growing this membership very aggressively as well, which is one of the big things that you want to see as a long-term shareholder. By being a member, it essentially just locks in customer loyalty, develops a brand and long-term moat around your business and reoccurring customer base. Since inception of the Cabana Club, they have seen over 400% growth in it. So it's absolutely been a success so far. And imagine if there's federal legalization in the United States and Germany and they enter those markets, you're talking about a potential multi-bagger here. You got to keep in mind though, Raj Grover, the CEO, will not go into the United States if he does not think that is accretive or it helps their business. Even without the United States right now, and if they were to not enter, you're already seeing some pretty quality returns on the stock. Another time that they needed to adapt or essentially die was in 2018 when they were just a simple glassware chain with only 8 stores. They needed to start selling flour, they would die out. You got to keep in mind also the CEO, Raj Grover, has been there since day one. Literally, he's the founder of the company. So he's had multiple times where he's needed to innovate and change the business or they would die out just because of how saturated and niche the cannabis market is. These difficult times for High Tide really shaped the strong and kind of the powerhouse that they are in Canada right now, and it also shows where they can go for any future issues that they might run into and that they're going to inevitably run into. This gives me a lot of confidence as a shareholder and is another reason that I want to build it up as kind of a core holding going forward in my portfolio. Also, it's a little fun fact as well. Since I started researching the company, the market cap has gained over $100 million and the stock is up 30%. That was during November, so just keep in mind how fast these things can move. It's also down about 15% since then too, so you need to keep in mind just small caps can move so fast. Now I want to go over some of the financials for High Tide. Revenue growth has been very solid for this company. They have a 3-year growth rate of nearly 50% and a 5-year growth rate of nearly 87%. Now keep in mind a lot of this is just through coming up and buying out new cannabis companies, so I don't know if I'd expect to see this going forward, but still remarkable what they've done. Valuation is one of the most appealing things about investing in a High Tide stock. Combine the negative stigma around the entire cannabis industry, which is always going to have a discount on the company. It's kind of like the tobacco effect. The market is not fully priced in that there's giant potential, not only within Canada, but also growth in the United States and Germany, which if you believe that they're both going to be federally legalized, probably going to be some good growth to your thesis. Very undervalued company, though, relative to where a lot of investors think this thing can go. They have a price to book of 2.5, a price to free cash flow of 13.6, which is very interesting. An EV to EBITDA of 10.6 and an EV to gross profit of 2.8. So very attractive valuation wise, and if you think this thing can go and really take over some other markets, I think it's relatively cheap in the long run. Right now they have more cash than debt. They have 35.97 million Canadian dollars in cash and 30 million of Canadian dollars in debt. They have a lot of debt simply because of the store acquisition. I would not look too deep into it. Once again, free cash flow is probably the most important metric that I look for in any business long term. And while I think a few years ago I would have been extremely turned off by this, now I kind of understand how, business cycles work. You can see they had heavily negative free cash flow in about 2018 to 2022. that was when they were buying up a whole lot of stores and still were in the early stages of their business and how it was ran. But now you can see a free cash flow explosion and a compound annual growth rate of nearly 80% on it. And considering that they're still using that positive free cash flow to acquire and build new stores, it's absolutely impressive. If they keep this up, there's a good chance we could see some share buybacks in the future, maybe even a dividend. But the market loves cash flows at the end of the day, and if High Tide continues this trend of becoming free cash flow positive, which is probably the number one most important thing for CEO Raj Grover, I think the market will eventually realize that. And imagine if they have that free cash flow positivity in the US and German markets, which are not accounted for. We could be seeing an explosion. Operating income is also going up and to the right as well. It's kind of the same general trend with all of their financials here. And they have a compound annual growth rate of about 30% on the operating income. This is also a company that consistently has had way more assets than liabilities, and that trend has been positively continuing since about 2021. Now, something that you often are going to see with a company like High Tide that is still expanding, growing, and acquiring new companies is dilution. Dilution is just simply how they raise the capital for that. I don't think this is a red flag at all, and actually I wouldn't be surprised knowing Raj Grover if the company's stock price got cheap enough, he would absolutely do buybacks. It's not just me that thinks High Tide has a long way to grow as well. Analysts have a lowest price target of $4.50 on the company, a median price target of $6.50, and a high price target of $8.50. This has potential multi-bagger all written over it. Honestly, I think the most unattractive thing about High Tide is just generally being in the cannabis industry, which has no fundamental impact on their business at all, which actually could be a blessing in disguise. Generally, the cannabis industry is very, very volatile. So if you're going to own this company, my biggest warning would just be have a stomach, be ready to underperform a few years, but in the long term, as long as the fundamentals keep growing and are strong like this, Raj Grover keeps doing his thing, I think you're going to see a pretty sizable return. High Tide has been one of the most fun companies I've been researching and investing in personally. We talk about it a whole lot over on my live show, The Cash Flow Kings, and you're going to get more of me there. So if you want more of me, I would recommend going and checking that out. Link in the description. Check out our FinChat link as well. Links in the description in the comment section for that. Appreciate you all for tuning in. Let me know what you think of High Tide. And of course, do dividend stocks, not drugs. Have a good one.